Account distribution per head option allows livestock operations to distribute expenses based on number of head on hand at any given period. There are some prerequisites that are required. First of all, you have to have livestock production center details for every livestock production group you wish to analyze. All of your livestock inventory account categories need to be assigned a balance detail of production center details. And all livestock purchases, sales, or livestock adjustments need to identify the livestock production center detail. That's what's maintaining the correct account balance in each one of your livestock inventories. Let's first take a look at those prerequisites. So we're going to go up to Setup and Profit Production Centers and Livestock Production Center Details. In the sample data, we have purchase feeders for a livestock operation, and we have a group of production center details that are for the year 18 and a couple for 19. If we look at one of the details, it is going to be identifying the profit center that you're using. In our sample data, there's only purchase feeders, but you might have multiple profit centers for the different type of livestock that you're analyzing or different stages of that livestock. The production centers are the locations that you're raising those livestock. And then we have the production year. And often in livestock, there'll be more than one production at any given location. So this identifies the production series. So the first group in this particular production center would be 1, the next group would be 2. And then you identify the lease owner. And over on your right, the accepting distribution needs to be checked if you want this particular group included in the distribution. In the case of using per head, it will pick up this particular production center detail as part of the expense if there is a balance in that production center detail in that period and if this box is checked. So if you have a production center detail that for some reason maybe they're going to be sold the first of the month and you don't want this group included in the expensing in that particular period, then you can uncheck this box and that would leave that detail out. So now we're going to go over next to our account categories. Our next prerequisite is that all of the account categories that you use for storing your livestock inventory need to be assigned a balance detail. So we're going to go to our purchase livestock inventory, but if you're raising the livestock, the same thing would be done for example, raised market livestock or whatever group that you might be using. So we're going to edit purchase livestock inventory, go to the balance detail, and it is assigned production center detail. In order to assign, I'm going to unassign this temporarily. Whenever you change something in this screen, you're going to get this message up at the top that any changes requires you to repost transactions so that it would correct the balances that are being stored. But you would highlight the detail over at the left of production center detail, click the green right arrow and move that to the right. This is now identifying production center detail to maintain balances for any accounts in this account category. And then you would save that. Now let's go take a look at creating a distribution. So we're going to go up to Setup, Accounts, and Distributions. We have several distributions here already. This is a grain and livestock operation in the CenterPoint farm. We're going to click New and make a new distribution just for livestock. I'm going to call this Livestock and give it a name of Livestock Distribution. You can give it a detail here if you want to identify a little description of what this distribution does compared to other ones. And we're going to go with the distribution detail. Every distribution can have one portion or multiple portions. We're going to click New and make our first entry here. And we're just going to call this Livestock. And the different types that you can have on distribution are percentage, per acre, per head, and per unit of crop production. This one will be per head. And whenever you change the type, it's going to come up with this warning indicating if this is an existing distribution, you're going to lose the information. Just go ahead and click Yes. And your timing can either be at transaction, meaning that the distribution is going to be calculated and assigned all of the details at every transaction entry and make those different journals. Or if you do the timing of later, then at the end of the period, you would go run the transaction or processes and apply distributions, and it would gather all the activity to each individual account and then apply one set of journals to that total for every account. In this case, we're going to leave it at transaction, and our percentage is going to remain at 100 because we're only going to have one portion in this transaction. We'll do another one later with more than one, but right now we're going to do just one portion in this distribution. And with per head, you can either do it by profit centers, and we could assign our purchase feeders, or you could do it by production centers. And then you would pick the production centers that you wanted to be part of this particular distribution. We're going to at this point do profit centers and do purchase feeders. And now we've identified what we want happening for this distribution. We wanted to do it at transaction, and we wanted to look at all of our production center details that have the profit center of purchase feeders and do it on a per head basis. So we're going to save this, and now we need to go back in there and assign what accounts we want as a default account to use this. So we have one called livestock supplies. And we're going to assign this account. You can assign as many accounts as needed that you want for this particular distribution, and accounts are assigned by company. So if you have multiple companies, every company would have its own distribution. And me flipping that, lost my distributions. Let me do that again. Okay, now we're ready to save it. And now let's do a payment using that livestock supply, and I'll show you what will happen. Well, let's go ahead and do the payment first. So we're going to do area ag, and we're going to do this in the month of January for $1,000, and our account was livestock supply. Livestock supply is the account that we assign to that distribution, and once we have an amount in there, our distribution button will turn orange. If you do not see a distribution button on your detail on the front grid, you can do add remove columns and add that column. We can click that orange button and see that it is using the distribution. We could uncheck this at this point if we wanted to put this to one particular group for some reason. We could certainly do that and uncheck it. Or we could change which distribution that we're using to a different one if we wanted to. But we're going to leave this at livestock distribution was at transaction, so we can see at this point that it distributed it to these three different production center details, the two 19 ones and one of them for the 18 South Barn 40. And let's go see why it did that. So if we go up to our setup and then accounts and accounts, go to the balances tab, change my period to January because that was the date of my transaction, and expand my purchased livestock inventory. Here are my three details that still have quantity remaining. My 18 South Barn still has the 40 head, and I have the two 19 production center details. So what's happening in this case is I'm going to bring over a slide here. And here is the breakdown of the three production center details with the number of head. That totals up to 112 head. So in doing each one of those portions of the calculation, it took, in the case of the 18 South Barn, it took the 40 head, divided it by my total of 112, came up with that calculation. My total amount for the dollars in my transaction was 1,000. Takes the 1,000 times that calculation and gave it a calculated dollar of $357.14. For the 42 head, it took the 42 again, divided it by the total 112, and allocated $375. And my 30 head, divided by the 112, allocated $267.86. So that is how we got to our payment distributed with those figures. It takes the total head that's on hand in that period and then divides it out by adding all the head and then proportionately to each production center detail. Let's clear this, and if I go back to my accounts and I change my period to February, now the 18 production center detail is gone. It got sold in February, so it's no longer there. I have the 219. Now let's go take a look and see what that same transaction does if I choose February date for, again, $1,000, and again, my account of livestock supplies, and go to my distribution and expand. Now I have only my 219 production center details, and you can see that the 42 head took more proportionately than the 30 head. So now it was doing the calculation by 72 total rather than 112. So that's how your different expenses are getting distributed based on the number of head that are available at that time. Now there's another way that you can, if you have some profit centers or different groups of your livestock that should be weighted heavier than the others because they are more labor intensive or they just take additional expenses, then there's a way to do that. And the first way is through the profit center. So we're going to go to Setup and Profit Centers. And in this operation, as I said, there's only one profit center. But let's take, for example, if this were a dairy operation and you had dairy cows and you had heifers. So let's create a new profit center real quick for heifers. And just put head here. That's all we need. There is a distribution factor on each profit center, and each time you create one, it defaults to 1 being the average. But if we were to say that heifers needed to be weighted maybe twice as much as the other profit centers that I have for livestock, then we could put a distribution factor on here of 2.0. What that would mean is if it, for example, if the heifers had 20 head, then it would take the distribution factor, multiply the 20 times 2, and calculate it as 40 head rather than 20. That would end up with the heifer profit center groups getting much more expense allocated to it than it would have at a distribution factor of 1, and the other livestock profit centers would get less. So that's one way to weight your different groups in your livestock, and another way is through the distribution. So we're going to go back to Setup, Accounts, and Distributions. And we have a distribution here for CenterPoint overhead expense. And in this one, we have 2 different portions so far already. We have one for crops being 70%, and it's getting done on a per acre, and livestock on a per head. Well, perhaps we want the livestock divided out by the location that they're being raised. Maybe one barn is taking more expense, more labor than another barn. So we could divide this out, and instead of it being 30% to livestock, we're going to say that this is livestock south barn, and still on per head, but we're going to give this one 20%. And on here, we're going to change this to production centers and assign South Barn. Now, South Barn, any production center details that are going to the production center of South Barn are going to get 20% of the whole. And we're going to make another new one now because this has to add up to 100. It defaulted now to 10. We're going to call this Livestock North Barn, still at per head, yes, and later because the other ones are at later, and again at 10%, which now we have 70 going to crops, 20% to the south barn, and 10% to the north barn. And then this is going to be at production center, and we're going to assign the north barn. So our 20% again is the south barn and now north barn. And we're going to save that. And we're going to go take a look at which account is being used. It's a lot of the utilities. Okay, so I have some transactions that has that utilities expense. So now if you have a distribution with a later timing, then you're going to run those distributions by going to Processes, Periodic, and Apply Distributions. And we're going to create a new distribution and select the company. It defaulted to January. I'm going to click OK. And I have utilities, that's $1,000. And you can see that part of it was given to the crops, $700 of the $1,000, and $300, well, actually $200 was given to the south barn here and divided it out this way. And $100 was given to the north barn. There was only one detail that was under the north barn, so we got the full $100. So this is the ratio of the livestock done this way is a little different than if it had been all into one portion under that distribution as 30%. Then it would be distributed a little bit different. So those are just different ways that you can manage how you want your expenses allocated to the different groups in your operation to maintain better management control.